Hey guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra, with me is Sonal and you're tuned into MF Corner. Today we're going to discuss the small cap space, which is only getting hotter. Mutual fund data for the month of June shows an equity inflow of around 8,200 crore rupees, but within this we saw 2,000 crores being pulled out of large caps as a record near 5,500 crores rushed into the small cap space. So this really throws up a lot of questions now, right? Is this sustainable? Are these massive flows distorting the valuations that we're seeing in the small cap space? Are fund managers having a tough time deploying this kind of money? Because we have seen lump sum investments being stopped by a few. So, I mean, a lot of questions to put to our guest today.
We will do that exactly because it is a point of discussion. On that note, let's welcome our Srinivasan, who's the Chief Investment Officer, Equity at SBI Mutual Fund, to talk all about small cap funds. Thank you so much for joining us today on CNBC TV 18. That's the first question exactly, because the small cap fund space is buzzing. We have seen a near 5,500 crore inflow in June itself. It's at a record high. Do you think equity flows will continue to be dominated by this part of the market, or the party is over?
I don't know how to think about flows in general, at least predicting flows. And when you think about predicting flows in a particular category, I think it's even tougher. But intuitively, I guess flows are driven by returns. And this whole space, the small cap index itself, is kind of almost tripled in 3 years. So I guess this will recede when the flows or when returns start diminishing. I don't know when that will happen. This is crazy because 5,500 you said, right? So 5,500 on an annualized basis would be almost 1/3 of the equity AUM, if I'm not wrong.
No, that is right, and exactly why we are having this discussion, because there's been so much excitement and chatter around it. But of course, we'll continue discussing this with you. Pavitra, over to you.
Well, absolutely. I mean, I think we've all been looking at the numbers and just finding it absolutely crazy the way money is rushing into the space. But you know, Mr. Srinivasan, the other thing has happened is that valuations have also gone up very fast, right? We were looking at some data which shows that obviously stocks held by small cap funds are way more expensive than the rest of the space. Do you think that this is just way too much money too fast? We've been talking about a lot of mutual funds that have stopped lump sum investments as well. How do you look at this?
No, absolutely. It is way too much money. It is coming way too fast. And it is impacting valuations. We've had this problem for a while, actually. So we stopped taking inflows in our small cap fund. We haven't been taking one-time inflows for a very long time.
Since 2021, right?
Yeah, even earlier. I mean, we opened it for a short window in COVID. We took like 1,000 crores and we stopped. But we have this problem yet because so we've restricted the SIP size to just 25,000, which is not much, right? 25,000 per pan. But we get around 550 crores of gross inflows every month. And we're finding it tough to deploy even that. So I'm sure the industry is facing a much, much bigger problem. And this is not good in terms of, if valuations are high, if you're buying it at higher prices, it has to impact returns at some point going forward. I'm sure the portfolios are also getting a lot more junkier. So this is a challenge, no doubt about it.
Okay, just one more question, since, you know, we are talking about this. A lot of sort of investors who are new in the market, they sort of course, get influenced by the kind of flows that we're seeing in this space and are suddenly looking at this category. Would you, want to suggest on how maybe a new investor should really go about putting their money into play? Because this kind of sudden rush into the small caps can go very wrong as well, right?
You're right. See, structurally, I don't think risk in terms of caps, right? I would be 100% invested in small caps if I like the stocks that I own. What we are talking is something different. We're talking of too much money chasing too few stocks, which is leading to valuations going up, which is definitely true for the category as a whole. So it is a problem of size. So when it comes to recommending an investor whether he should be in small caps or he shouldn't, so I think one way to think about it is small caps are like maybe 10-12% of the market. So maybe you shouldn't have more than 15-20% in small caps. But I don't know how to answer this here. So what you say is a problem. But I don't think if I have a small fund, let me put it differently. If I have a small fund and I like stocks in the small cap space from a bottom-up perspective because we run small caps from a bottom-up perspective. I'm very happy to have 40, 50%, 70% small caps. It is very stock specific. And it's not, what I'm saying is not true for the category as a whole, because 70% of the category is something we don't look at. We only like maybe 15, 20% of the category. Within that also we are selective depending on valuations. So I'm sorry, I don't know how to answer that question, but generally speaking, maybe like 15, 20% of your portfolio should be small cap, but that's some thumb rule.
Which it doesn't sound like you agree with too much.
Sorry?
I was saying that some sort of thumb rule you're saying, but in a market setup like this, where perhaps, where everybody is talking about the fact that maybe large caps are not going to generate those kinds of returns for you. If you do want to generate sort of higher returns, you do have to look outside of the index, right?
I know where you're coming from. No, I know where you're coming from. You're talking about small caps as a category. You're talking about valuations for small caps.
We have index funds also in this space.
So I'm saying that if you have a fund which is small enough, can you find 25, 30 stocks that can give you a return of say 15 to 20%? Yes, you can. That's my point. But if you have a fund which is large, then your ability to buy those stocks and size them up, you don't have that ability. So larger funds, larger small cap funds will have a challenge that includes us. And I think they won't deliver going forward because of this situation. Your question was different. You were asking me, what should an investor do?
Yeah.
Maybe an investor should pick a fund which is relatively small. I don't know whether there are small cap funds out there. But then he also has to be cognizant of the track record, the fund manager, the strength of the team, the fund house, pedigree and stuff like that.
But we really can't say that even small cap funds are small anymore, right? Look at the AUMs of some of them and they are actually just expanding. No wonder the lump sum investments have been stopped as well. But what the next...
So this is a question we get, right? So we've been good in small caps.
Yeah.
We've done well. Our stock picking abilities are out there. And investors ask us which fund then should we put given that you have size constraints. I don't have an answer because there is just one small cap fund. We're not taking inflows there. I just direct them to our alternatives team where their funds are relatively small, but that's a different segment altogether.
Okay, so we'll of course discuss that as well since you've put some spotlight on that on a later day. But when you talk about not accepting funds in small cap funds or, they are talking about lump sum investing not happening here, what about valuations right now? Because I was reading a report a few days back that they are still cheaper than large caps. Do you agree with that? Is that something that will continue to be the theme? When we talk about flows, we just wanted to understand whether valuation-wise it is a safer space to be in for investors.
See, I'm very uncomfortable talking about valuations as an average in small caps, right? Because it's there is a lot of dispersion. It's like having your head in the oven, leg in the freezer, and the average is fine. Right? The average is not fine. And small caps are like, so you have 250 stocks in the 250 small cap index. You've got 950 stocks in the BSE small cap index. The average doesn't really make sense. So what we like is a very small universe within this whole segment. And within that universe, so I can talk about stocks that we own and the stocks that we like, and then whether we would like to buy them. So those set of stocks, we focus a lot on at least we try to buy a small cap stock where the quality of business is relatively better, the management has a track record. These stocks are expensive. I don't feel like buying more at these prices, which is why having more money is a constraint. It's a problem of plenty.
Yeah. Okay. No,
it's very tough for me to speak about this as an average.
No, we completely get that. Mr. Srinivasan, could you take us through what your cash position is like? Because a lot of mutual funds seem to have just increased their cash positions that they're sitting on as well right now for this simple reason, right? Because they don't know where to put in the money at this point. What is the kind of cash that you're sitting on in the small cap?
So we are like, right now we're 9% cash and we have an additional 7% in Nifty futures. And the reason we have money in Nifty futures is because we don't go more than 10% cash.
Okay.
So it's not cash. I mean, we're playing the market through the futures, but that's something I would have preferred to have invested in some small cap stock, which I'm not. So clearly, I'm short of ideas. I have a liquid. See, the way to think about capacity in the small cap category, since that's what you're talking about, is think in terms of three variables. One is what percentage of the fund you want to buy in a certain stock, right? So let's say you want to buy at least 2%. Why wouldn't you want to buy at least 2% in a stock that you like, right? That will be an average of like 50 stocks if you buy 2% in one stock. Think about what percentage of the trading volumes you can effectively buy. Let's say you can buy 50% of the trading volumes. 50% is actually very high because delivery volumes within those trading volumes are like maybe 15, 20%. Then think about what percentage of the universe out there you can actually buy. So let's say you can buy 30% of a 500 stock small cap universe, right? Which is about 150 stocks. Now, if you work backwards, and this is a file that we run, this is the basis on which we talk about capacity. This is the basis on which, this is why we've stopped taking money in this fund. The capacity for a small cap fund based on 2% minimum weight, based on 50% of trading volumes, which is pretty high, and based on 30% of the small cap universe, I'm talking only 500 stocks here, which is the top 150 stocks again, the capacity will be around 16,000 crores, which is, I think, lower than what the AUMs of a lot of small cap funds are out there. So what it effectively does is compromises the fund manager's ability. He has to either own more stocks or, again, when I talk about liquidity, I'm talking of stocks being, you should be able, you will be able to exit these stocks only in 21 trading days, which is a very, which is a very illiquid universe that you're holding on to. It effectively reduces the churn that the fund manager wants to do and is actually able to do. The churn on our small cap fund, the effective churn, not excluding the futures, because there's a rollover there, is just 10%. If you ask me, I would like to churn more. I would like to exit a lot of stocks, but then I'm constrained by the 65% in the size.
Is that the industry standard?
I guess I'm being a little too blunt here.
No, that's exactly an honest opinion is what we require here as well. But is that the industry standard, 10% churn in small cap funds?
I don't know yet. I'm sure fund managers would prefer to churn more, especially in the small cap space, because small caps, see, inherently when you buy a small cap, right, you are somewhere going down the quality curve. You don't find these companies are not time tested. Managements don't have enough breadth. And there are few companies out there that qualify all the tick boxes where you have a very high degree of confidence. So the moment you start owning, and I'm very uncomfortable owning 50 stocks in the small cap fund. My ideal holding size would probably be 30. But I own 50 stocks because I have to manage liquidity too, right? At an overall level. So the moment I think it goes beyond 60, 70 stocks, it clearly, whether the fund house accepts it, whether the fund manager accepts it, it clearly represents constraints.
Oh, we completely take that point, and thank you for sharing that with us. It's been a very interesting chat so far, but Mr. Srinivasan, we do have to take a short break. Please stay with us because we're going to come back in just 2 minutes to continue this conversation.
Welcome back. You're still tuned into MF Corner. Still have with us R. Srinivasan of SBI Mutual Funds. This is an interesting discussion all about small cap funds as well. Mr. Srinivasan, while we are talking about the bottom-up approach that you told us as well, there are limited options, but we've seen a lot of exuberance across. There are several opportunities and names that can be extremely risky as well. Do you think in that case, active is the better way to approach the small and mid-cap investing space where there are experienced fund managers making this pick?
It's like asking a barber whether you need a haircut. So you're asking an active fund manager whether active is better.
No, but
I think so, yeah.
No, please go ahead, yeah.
I think so. But right now, let me admit, the benchmark is ruling the roost because we are underperforming the benchmark. And we are not worried about it. I'll tell you why we are not worried about it. So clearly, a larger set of stocks are doing better than a select smaller set of stocks. We are not worried about it because we kind of focus a lot more on drawdowns. So I would like to think that our drawdowns are much lower when markets fall. And that's where we really generate excess returns. And for a small cap investor, I think he shouldn't necessarily chase the best performing stock out there. He should focus on not losing money. So from that perspective, I reckon active is definitely a better way to invest.
You know,
we have a lot of, we spend a lot of time and effort. We have a large analyst team, and I'm sure all that adds up and delivers value at the end of the day.
You know,
so yes.
Yes, sometimes the barber also tells us, come after a month, you don't need a haircut right now. So maybe that's exactly what you told us, that index is, yes, please go ahead.
Yeah, I think that's what I'm saying, come after a month.
Okay, you know, Mr. Srinivasan, we did see the Motilal Micro Cap Index Fund being launched. Do you think that is something that you would consider launching at SBI? Just a micro cap index fund? I know you are an active fund manager, but from the group?
I don't know here. I'll have to check what the liquidity there is and what size we can take even on an index fund. So I'm sure we are open to it. We are the largest passive guys out there, and we will, if there is a case for it, we'll definitely be open to launch it.
Okay, cool. So now that we've spoken about the exuberance that we're seeing in small cap funds, we've spoken about how it is very difficult to talk about the flows or the action that we'll see here. But generally, since we're talking about it being an illiquid space, certain risks that an investor should look at if they're looking at watching us right now, because we are seeing a lot of retail investment in this space. Some risks that you would like us to know.
So, one, small caps generally, right? Again, I'm making general statements. Yeah. Let me again qualify that I've been a small cap guy throughout my career. So if I have, let's say I want to build a portfolio of like 20, 25 stocks, it is likely that I will have more small caps than not, because there are more stocks out there. And there is also some information and research arbitrage that allows me to make better returns without being necessarily smart, right? Now, having said that, it's important to understand that small caps inherently, they don't have, so these are typically companies where the target addressable market is not large. It's relatively small. So it's very tough to kind of compound growth on a very longish basis, not necessarily, but generally speaking, right? These companies they don't have a long enough track record. Not all small caps, most small caps don't have, which is why probably they're small caps. The breadth in the management is questionable. The nature of growth itself that you are predicting, it is probabilistic with a lower probability. So there are inherent risks associated with investing in a small cap that requires a lot of conviction and research in the business, in the management, which is why you want a very meaningful margin of safety when you buy the stock, right? Yeah. So that's one part of it. And the second part of it is just the way we classify risk, which is volatility. So small caps are inherently a lot more volatile. And if you are sitting on an illiquid portfolio, it not only, I mean, you just won't be able to sell it. If something goes wrong, we typically go wrong in 3 out of 10 stocks that we pick. But the advantage of being in a mutual fund is that you are able to correct yourself midway, right? So whatever stocks you are going wrong on, you exit. Wherever you're going right, you buy more. If you're not able to do it because of illiquidity, that just makes the situation worse in terms of returns. So these are very significant risks in small cap. So effectively what I'm saying is liquidity, and that's the fact that it's tough to find a quality business. Not in terms of number of stocks again, because there are a lot of small caps out there. I'm saying in terms of being able to deploy meaningful value in terms of AUM size.
All right. It's been a very insightful chat. Mr. Srinivasan, thank you very much for joining us today and also giving us, the fund manager's perspective in addition to all of this advice that an investor could use. So thank you for joining us on this show. I hope that helped all of our viewers. We're going to wind down on that note. This is it from the MF Corner team. Stay tuned. Closing bell comes up next for the final hour of trade.